Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 31st, 2022. Let's talk about most beaten down stocks. As you all know, January has been very brutal for the stock market and there is a lot of buying opportunities. So with that we got 1-800 flowers. Stock got clobbered last week. Let's see if it's a good time to buy 1-800 flowers. Then we got greatest semiconductor test equipment maker here, Teradyne, which is a great stock here. Stock is clobbered, down big time. Good time to buy some Teradyne. And then you got Lam Research, one of the great semiconductor play here. It's also down big time. And we got TREX, which is into wood alternatives with the nice looking deck. I think it's a great stock to buy. And then you got CROX. CROX also fell off the cliff. And let's see if it's good time to buy some CROX. And finally, we got home builders like Lennar, Toll Brothers, DHI, which is Dr. Horton, all down. And at this time, I'll be slowly looking at these as Fed increases the rates and also stops or tapers the bond buying program that could have some impact on home builders. It's good to slowly watch and start buying in say a couple days. So with that let's jump in and look at some of these names here. All right, so from a news perspective, as you can see here, we got two no-brainer metaverse stocks. You can see here we got Himax and Matterport. Both are down big time and slowly they're trying to go higher. So I would slowly buy these names here and go from there. And then you got Boot Barn. Boot Barn stock clobbered after beating the expectations, and they got some concerns about future. That's why stock came down. Good time to buy some Boot Barn slowly. And then you got Crocs here. Crocs is slowly going higher off late. Stock fell off the cliff earlier. It's a good time to slowly start buying some Crocs here. And then you got Keysight Technologies, one of the great growth stock, came down to earth after all this rotation here. It's good to look at Keysight and slowly start buying. And we got Sherwin-Williams here, a great paint company, as many of you know. Stock came tumbling down because their raw material costs are going higher, especially petroleum. I think it's good to buy this quality company slowly and add to the portfolio. And then you got Lam Research here, one of the great semiconductor play. I think it's good to buy here. Stock came down. And finally, we got a great home builder here, Lennar. I think it's good to buy this one also into the weakness slowly. We have to watch Fed a little bit on this one here because as Fed tightens the rates and increases the rates and also taper the bond buying program, that could have impact on the housing stocks. We'll watch that carefully. So with that, let's jump in here and look at the market. As you see here, we got Dow Jones Industrial Average up nicely, as you can see here. Nasdaq up nicely, and we got S&P 500 also up nicely. And we got a lot of advancing stocks, very few declining stocks. So at this time, you got to be careful here. This is a Fed-driven market. As Feds make some statement, this can come tumbling down pretty quickly. So that's why I will be careful here. Don't take 1 or 2 days action for a course correction here. So there will be few more ripples down the line here with the Fed making some statements, and if they increase by 2 basis points or say 50 basis points, then we can have a little bit downturn here. So we got to be careful here, buy the dips. And if you see huge rally like this, you can take some money off the table if you're a trader. Otherwise, buy the dips and hold the dips, hold the stocks, and go from there. So with that, let's go into some more detail here. So from a sector performance, as you see here, we got great performance. Look, consumer cyclical stands out, as you can see here. Nice 3.8% performance in one day. That's the biggest performance in today. The reason it's done well, look, it's been down big time in 1 month. It's down most in 1 month. It bounced the most. Consumer cyclical is one of my favorite sector. We got stocks like Amazon, Home Depot, Lowe's, and so on and so forth. It's been beaten down badly, so that's why it went up nicely. And then as you scan through here, we got technology. Look, technology is also down big time, 8.3% in 1 year, 1 month. And look, it also rebounded pretty nicely here. So anytime technology drops down, don't worry, buy some technology. If you're not confident about individual stock, buy some XLK, buy some QQQ, that will serve you well. Look, 5 year performance in technology handily beat all other sectors here. So that's why don't worry too much about technology. When it drops big time, buy some technology. It will come back very nicely. And then you got healthcare, one of my favorite area here. It's also down big time. It's still a good time to buy some healthcare. It will do long term. And look, energy is very high here. Don't chase energy up here. Let it come down. Then you can buy. It's super hot at this time. I would just wait for it to cool off and then look at buying energy. So with that, let's jump in and look at the fear and greed index. As you can see here, previously we had 36 as the fear gauge here for the previous close on Friday. Now we are 38, so we are really moving in the right direction. But don't think this will continue. We can come back to say 30, 35. So that's why you got to be careful here. Just a 2 or 3 day rally doesn't mean we are changing the course here. So I'll be careful here. I'll wait for stock to drop little more as Fed tightens and increases the rates. So with that, from a pattern perspective, as you see here, we got greed, stock market tumbled, greed again, stock market tumbled, greed, stock market tumbled. Right now we are at 40. I can see us coming to say level 30 level or so before we pick up again. If you're a long-term investor, you could buy slowly at these levels here. Or if you want a better position, wait for it to come down to say 30 or so, then buy. So you could even buy slowly now, but as it nears 30, that's when you can start buying more and go from there. So with that, let's look at most beaten down stocks. As you see here, all these stocks are most beaten down. Look at the 1 month performance here. 1 month performance is down big time. As you can see here, all these stocks are down big time in 1 month. And what I've done is I wanted to make sure you are getting the best stocks available. So that's why look at the sales and sales growth. All nice sales and sales growth. Nice quarter over quarter sales growth. These are growth companies. These companies are growing. And also look at the gross margin, nice gross margin, and look at the net margin. These companies are making money. These are not money losers. So that's why it's very good to buy these type of companies in this market, because these are money making companies, not money losing companies. And look, RSI is low for all these names here. So that tells you all these stocks are, on sale right now. So that's why you could buy them, because these are on low RSI. That tells you stocks are sold off here. And look, we got here 5 year performance. All these stocks have done great in last 5 years or so. That's why in the long term story is still intact. Short term they have weakness in 1 month. That's why, because long term story is intact, I would be buying these names here. And look, all these companies have got nice Altman Z score. That tells you financially these companies are stable. These companies are not going to go out of business anytime soon. And look, from a Morningstar rating perspective, all these have got great rating. Look at the rating here. All of these have got financials above C grade here, which is very good. And few of them have got A grade also. And overall score is very high for many of these companies, squarely above 50 in most cases, except for one case here, which is I think it's let's see here, probably Toll Brothers here, except that everything else is, I think, pretty nice and high. So with that, let's look at few of these names and go from there. Top of the list, we got Himax. It's a chip play, as many of you know here. Look, it's down 28%, most in 1 month here. And look, overall score is very nice, 93, and Altman Z score is also very nice. And profitability is D here, but otherwise financials and growth are C. And look, RSI 36 tells you stock is sold off here. And valuation perspective, low price to sales ratio and low price to earnings. So you could slowly buy this stock here and go from there. And then you got boot porn. Boot porn, as many of you know, stock got clobbered when they announced earnings. Look, it's down 27% in 1 month. It's trying to rebound in 1 day, as you can see here. And it's also got a C rating in both growth, profitability, as well as financials, and nice 86 rating overall, which is very good. And then we got a few more here. We got WTS, which is Watts Water Company. People don't talk about this stock enough. It's done nicely, as you can see here. Nice 146% performance over last 5 years. And look at the financials. Great A grade in financials and overall grade 72. So as you look through here, I will not talk about all of them. One of my favorite is key sites here. Key sites is down big time, as you can see here. Nice grade and got nice A grade in the financials and nice B grade in the profitability. And overall score is 63. You could buy this one on this downtime here. And then you got BLDR. Look at the overall rate here. It's got 100 out of 100 overall rate. That was one of the good stock here. Look, it's down 19% in one month here. You could buy this quality stock here and go from there. And then we got a few more, as you can see here. We'll not talk about them in detail. Lamb Research, one of my favorites here. You could buy this one here. Look, overall nice grade here, 70, and nice, profitability, growth, as well as financials here. And we got a few more, as you see here. Home builders like Leonard and Dr. Horton, great one you could buy here. Even Toll Brother is a good one. And then you got LULU. LULU is also a good one, down big time, as you can see here, 16%, and it's a good one to buy. Look, even in 3 months, LULU is down, so you could take advantage and buy some LULU. They always come back nicely. And I also like Estee Lauder. It's one of the great beauty type stock here. Look, it's down nicely in 1 month and 3 month. Up today, you could buy this quality company. Look at the financials, A grade from Morningstar, and profitability is also A grade. You could buy this one here. And then you got last but not least LPX. Look at the overall score 99, which is very, very good. It's got B grade in financials, growth, as well as profitability, which is a very good grade. Down 14%. You could buy this quality company and go from there. And then we got few more here. We'll look at few of them, as you can see here. We got Expedite International, which is a great logistics play, as many of you know here. Nice overall score and nice financials and great profitability, as well as growth. Stock is down, as you can see here. You could buy this quality stock here and go from there. And I got few more, as you see here. We'll not talk about all of them, but touch on one or two and go from there. Look, we got 94 score here. DHR, Danaher, one of my favorite stock, down 13% in 1 month. You could buy this quality stock in this downturn. And you got Thermo Fisher in the same health, life sciences area. Look, overall score is great. You could buy this one, put it in a retirement account. This will do great. And we got Cisco. Cisco is pivoting to software, recurring revenue, as many of you know here. You could buy this quality company here, down 13% in 1 month. And we got a few more, as you see here. You could buy these names slowly and take advantage and go from there. Next, what we'll do is we'll compare a few of these companies and see what we can make out here. So with that, before we compare, let's go to the charts. From a chart perspective, as you see here, first we got 1-800 Flowers. Look, stock is down after the, even before the earnings, it was down, as you can see here. After the earnings, it came a gap down, as you see here. At this time, stock is trying to go higher, as you can see. On the balance volume, is trying to go higher. That tells you there are more buyers coming in now to buy the stock. Look, after dropping big time, now stock is trying to make a move here. Even up here, look at the RSI completely sold off. So you could buy this company slowly here. This will do well. Stock got clobbered because they missed on the earnings, they missed on the revenue, and they also gave a bad guidance. I think that's why stock came tumbling down. At this time, the risk of still going lower is very, very, very low. You could slowly buy this company and go from there. And then you got Teradyne, which is one of my favorite stock. Look, stock had done nicely earlier, but now it came tumbling down. It's one of the great stock here, very, very steady Eddie type company here. You could take advantage, buy some Teradynes, basically put it in your long-term account. It will do very well. And then you got Lam Research after jumping, nicely. It came tumbling down here. Now it's trying to go higher. Look on the balance volumes, pretty nice here. Telling there are more buyers than sellers. You could buy this one also and sock it away. It's a great one. And then you got Crocs here. Crocs has got cool looking Crocs or shoes. Look, it's trying to go higher as you can see here. At this time, I would say you could slowly buy some Crocs and go from there. Look, on the balance volume is also trying to go higher. All right, now we got some more here. We got Keysight. Keysight, look, it came tumbling down here below 200-day moving average. Now it's trying to go higher. So at this time, I'm a buyer of Keysights. This can do very well for your portfolio over the long haul. And then you got Lululemon. Look at the drop here, huge big drop below 200-day moving average. Now it's trying to go higher. So you could buy some Lulu. It will do very well in the long term. And then you got Estee Lauder here, again a beauty play here. Look, stock came tumbling down and now it's trying to bounce off. On the balance volume is also going higher. So I would be a buyer of Estee Lauder, quality company. You could slowly buy. Look, it jumped up $8 today. Even now RSI is 41. Tells you stock is still undervalued. And then you got Expeditors. It's again a logistic company. Stock is trying to go higher. And look, on the balance volume is also trying to go higher. So at this time, I would be a buyer of Expeditors here. It's a great play for long term. Stock is sold off, evidenced by low RSI here. So with that, now let's compare few of these selected stocks and go from there. Look, we're comparing few stocks here. Top of the list is FLWS 1-800-Flowers. As you can see here, overall score is 73 and it's done nice 76% even after this huge big tumble, still up 76% for 5 years. But look, it's down 56% for 1 year and it's got a strong buy rating from analysts here. Good target price, almost double the current price here, $35. Current price is $17. Nice revenue and nice revenue growth as you can see here. Good gross margin and company is making money, net margin positive. As free cash flow is also positive, company is making money. And valuation perspective, very low valuation, and they don't have too much debt. Debt to equity ratio is 0.6 as you can see here. And look, nice Altman Z score. Company is not going to go out of business. And nice Piotrowski F score, 5 or higher than 5 tells you the accounts, their books are improving. That's always good sign. And nice grade from Morningstar. I would say take advantage and buy some FLWS here. Next is Teradyne, one of my favorite stocks here. Very, very steady Eddie. Overall score is 56 as you can see here. Look at the grade from Morningstar here, all BBB. That's a great grade here. Could buy this quality company. Look at the 5-year performance, 321%. That's great here. And they got nice Altman Z score. Look at the Piotrowski F score, 7. That tells you the accounting and its books are getting strengthened here, which is always good. And look, it's making money, not a money loser. Nice earnings per share. And also it's got price to sales ratio, which is low, and even price to earnings ratio low. Company making money, net margin positive. So I would be buying this name here. This will do very well long term. And then you got Lam Research, which is one of my favorite play again, semiconductor play. Look at the overall performance in the last 5 years, 451%. That's a great year. And look at the Altman Z score, 8.9 here. And Piotrowski F score is 7. That tells you books are very strong here. Anything above, say, 5 or 6, it tells you books are very strong. And great score from Morningstar in the growth, profitability as well as financial. So I would be buying this name here. This will do very well long term. Then we got Crocs, as you can see here, cool looking shoes for everybody. Look, it's got a nice positioning here. Stock is down big time. It's got a buy rating, as you can see here. And look, it's done nicely. Look at the performance in 5 years, 1,319. So it's only normal for this to breathe, take it easy for a while here. But look, it's got a nice Altman Z score, tells you financially stable, and nice Piotrowski F score, tells you books are consistently good, and great score from a profitability perspective, as you can see here. So I think it's a good one to buy here. And Keysight, again, one of my favorite here. Look at the performance, nice, 356% in 5 years. Company is making money, net margin positive, and from a valuation perspective, low price to sales ratio. Price to earning is a little bit higher, but not too bad for the growth company. So I would be a buyer of this company here and go from there. Then you got Lululemon, which is a very hot stock here, and many millennials love this company, and they buy fitness apparel from this company. Look, it's done great in 5 years, 399% performance. Company is making money, net margin positive, as you can see here, and it's got a buy rating from analysts. And stock price target price is maybe around say $100 more than current price, which is very good here. And we got a few more here. Estee Lauder, which is again one of my favorite company. Everybody want to make put on makeup and enter Zoom meetings. As you see here, nice performance in the last 5 years, and from a valuation perspective, a little high from a price to earning perspective. Price to sales perspective, it's not too much at all. And look, nice net margin here, 17%, which is very good here. And then what EXPD? EXPD has got a hold rating. It's a logistics company. Look at the overall performance, which is very good, highest in this list here, and great score from Morningstar. Company is making money, net margin positive. I would be a buyer of this one also. And then you got Leonard here, a home builder. Look, it's got a nice 71 overall score, and company is making money, net margin positive, as you can see here, 15%, which is very good here, and done great in the last 5 years. And then you got two more here, Train and Boot Barn. Train, as you can see, are on a hold right now, and overall score is 40, which is a little bit lower in this list here. But as you can see here, it's done great, 212%. It's a steady Eddie type company here. People don't talk about this company too much. Net margin positive. I would be a buyer of this one also. And then finally, we got Boot Barn here. Again, a great company. Look, it's got an overall rating, very nice, 86 here. It's done nice, 776% in 5 years. Net margin positive. So with that, take advantage of these names here, down big time, all financially stable. Look at the Altman Z score, all nice and above, say, all of these are above 3 squarely, all great companies, great books identified by Piotrowski F score that tells you, the books are consistently good and they know how to manage their finances. So with that, I say, buy some of these names here. Don't worry about the stock market. It will do very well long term. Take advantage of these great beaten down stocks here, and build portfolio. So with that, thank you very much. Happy investing and trading. Please subscribe.